Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Matt S., Jackie A., Gordon S., Nick W., and Sean M. We have a returning guest on the program today. Mr. Greg Smith is with us. Greg is the president and CEO of Equinox Gold, a growth-focused mid-tier producer that has 4 producing mines in Brazil, 1 in Mexico, 2 in California, United States, and construction underway at a new mine in Ontario, Canada. In addition, the company is advancing mine expansions in Brazil, Mexico, and the United States that should significantly increase the company's production over the next few years. Equinox Gold is listed on the New York Stock Exchange under the symbol EQX, as well as on the Toronto Stock Exchange under the symbol EQX. Greg, welcome back again to the program. We spoke a couple of weeks ago, and we'll play that conversation here shortly, but I wanted to bring you back on the program to talk and update because the company just announced and closed a convertible bond issuance in the amount of 172.5 million US dollars in convertible bonds that carry a coupon of 4.75% that mature in 2028. These are unsecured, very good cost of money, by the way. Tell us about that. What are your thoughts?
Thanks for having me. Yeah, we announced that financing Monday afternoon, and we just closed that yesterday morning. We did that financing because, as you said, the terms were very good, far more attractive than our existing convertible note that's maturing in April of 2024. Doing this debt financing today enabled us to pay down our revolving credit facility or partially pay it down, save a substantial amount of interest, the delta in the interest between that revolving credit facility and the interest rate on the note. And then it positions us, to manage the upcoming maturity of the April 2024 $140 million notes, which have been in the money here and there, but you never know what the market's going to do, and we had to be prepared to handle that debt maturity. So from our perspective, this is a very positive financing for the company. Unfortunately, the market reaction was not so positive, and certainly that was frustrating and disappointing for us.
It's a bit of a short-term view in that respect with respect to the market. I think with Greenstone coming on board here soon, backstopping that, taking a cost of capital that is exceptional in this market, especially compared to your peer companies. I can think of probably at least 3 to 4 peer companies that are paying higher interest rates, and the amount is really marginal. It's a smaller amount and quite manageable given the structure of how you've done this. So good on you for doing that. It leaves quite a bit of room. And again, the equities will have to respond in due course as Greenstone comes on. And of course, the gold prices continue to hang around, if not move higher in the coming months.
Oh, we feel the same way. I mean, in any, managing these companies, especially a company like Equinox, it's in the middle of a large build and commissioning. It's a world-class mine we're commissioning in the first half of next year, but you don't want to have to sit there and have the risk of making a major debt payment right in the middle of that commissioning. And so in the normal course, we're going to be always managing the debt maturity ladder, I'll call it. This financing kicks out, a reasonable portion of our debt out to October 2028. And we were able to do that at terms that I thought, and certainly others I've spoken to have thought that were very attractive. And so, the merits of the transaction, I think, are clear. We'll just focus on the task at hand, which, as you said, bringing Greenstone into production here in the first half of next year.
Very well. Appreciate the update on that. Okay, well, let's move into other things here. Of course, you've been on the program before, so I'd like to just forego the introductions. And with that, I'd like really just to start off and get your take on the market conditions we are in for gold, what your outlook is, and also given the sentiment for many juniors and mid-sized companies, based on your experience, is this a good time to get the feet wet in the sector?
Boy, there's a lot to unpack in that question. It's an interesting dichotomy, I guess, where you have the gold price, performing, I think, relatively well, especially as you look at the strength of the US dollar and current interest rates against a gold equity and in particular the junior side, where the stocks and the valuations are trading at sort of historic lows against the gold price. And so when you look at it, and some of the banks have charts on this, when you look at that on a graph like that, it's probably the best time ever, historically to get into the gold equities, given where the gold price is. There's other variables in there. We've had a fair bit of inflation over the last couple of years, so you've had some margin compression. The gold price hasn't reacted the same way costs have over the course of sort of 2021, 2022. But I think to be in this industry, you got to be bullish on the gold price. And you look at, what's inevitably going to happen is interest rates will start to come down, and the US dollar will start to weaken. And in that context, you should see the gold price start to perform in US dollar terms. When you look in Canadian dollars or, in China and Japan, gold is either at or bouncing off all-time highs. So gold's been doing great. The equities not so much.
Yeah, Greg, good points. And I think it is an exciting time to be looking pretty hard at this because we all know what the outcome's going to be. It's a matter of solvency and time is where we need to look, and a great time to be looking at the sector and also just looking at the more stable equities in the business, much like Equinox Gold and where Equinox Gold is headed and the trajectory we see with the projects there. I'll tell you what, why don't we get right into Equinox here? Let's kick it off here just with a capital structure update first, Greg, and then we'll get into a bunch of other detailed items. But where are we in terms of shares outstanding for the company, the cash on hand, the debt and revolver status, and then also major shareholders at this point?
Yeah, I'll start with our shareholders. I mean, I think most people who are familiar with the company know that Ross Beatty is our largest individual shareholder in the company. He's also our chairman and a founder of the company. So he's still sort of sitting there at the top of the pile. We then have all the usual, I think, institutional names in the equity as well. And all of us in senior management and many of our employees are also shareholders, and our employees part of a share purchase plan as well. So we actually have one of the larger insider ownerships in the space as you compare to our peer groups. Today we've got about 315 million shares outstanding. We're sitting on cash of around $180 million. Our net debt would be around $660 million. And then our market cap today in Canadian dollar terms is around 2 billion.
Very well, Greg. I appreciate that update. I think the other exciting piece here as well that I'd like to get an update on is Greenstone in terms of schedule to commercial production, current work at the site. I understand that you've been there at site as well recently. And then just with that, how the budget is coming in on the project. Why don't you just cover all that off? Because Greenstone obviously is a real game changer for the company.
Andrew, it really is. And was there on site last week. We brought our analysts, some of our lenders, some of our institutional shareholders, and we've got a lot of pictures on our website, and we've there's some videos and presentations out there, but it really doesn't compare to going there in person. And going back a couple years when we first acquired the project, and it's just a big empty plot of land. And to see it today is really quite incredible. The scale is, for us, it'll be our largest operation. We own 60% of it. It's a joint venture with Orion Mine Finance, and they were out with us last week as well. And I think we all felt the same way, just walking around, looking at this thing. It's a world-class mine. Like it's just the infrastructure is fantastic. Community support is fantastic. Good relationships and commercial relationships with the local First Nations. It's just everything you want in a mine, right? And it's advanced. I think we announced construction in October 2021, so we're almost at 2 years in here, and we really are in the final stretch. Initial and pre-commissioning activities have already started. We'll be moving into wet commissioning by the fourth quarter here this year, and then going into the first half of next year, we'll be into hot commissioning. So this thing is going to come into production here real quick. From an Equinox perspective, at the end of June, our attributable to us, we had about $170 million left to spend. The mine is on schedule, and while it's on schedule, it's also on budget at the $1.22 billion. And so this will be a mine that we intend on bringing into production on time, on budget in the first half of next year.
Really to me, Greenstone once fully ramped and is steady state, will have a significant impact on the production numbers of this company, but really also underscored by the improvement of the overall cost profile of the company. Just talk about that for a moment and how important that is for you.
So 400,000 ounces a year, the first 5 years, about 240 of that is attributable to Equinox. So this year we'll do around 600,000 ounces. So not quite 50%, but a pretty significant increase in our production profile in starting in 2024. The mine itself is, if you think about it in the context of open pit operating mines in Canada of scale, it'll be easily in the top five sort of longer term. When it starts production, it'll be here in the top sort of four. When you look at that, you're looking at Detour, I think is number one, and Canadian Malartic would be number two. And then we're sort of neck and neck with Côté coming into production here. Their annual production is a little higher than ours at, I think, 500,000 ounces a year. Our grade is higher than theirs. So our average grade over the life of the mine is 1.27 grams per ton. So that would make us one of the highest grade open pit gold mines of scale in Canada as well. So you're right. It's a game changer for us. The high grade and the large throughput, large production profile will also serve to drive down our average costs. I think Greenstone's cost structure is going to be very competitive. A little higher than the feasibility study, of course, because that was from 2019 and we've seen some inflation since then, but still very attractive cost profile for this mine.
Yeah, absolutely. And to be completely expected there with respect to the escalations.
Well, and
So I
gold's
think,
up several $100s as well from that point. So they kind of go in lockstep. But our plan here is in February when we put out our corporate guidance for 2024, we'll also update 2024 expected production from Greenstone and what we'd expect the cost to be in that first year.
just the ability to keep this thing on schedule, keep the budget in line, Greg, I think is a good accomplishment and speaks to the team efforts, because it's been quite difficult over the last couple of years dealing with long lead time items and availability of materials and equipment. And then, of course, the escalation, which is far outpaced, in my opinion, has far outpaced the gold price. We'll see that change, obviously, over the next couple of years. I think it will. But good on you for the efforts on this one. I think this is a really important project. And then also, I'll just add one more thing before you say anything, is just that the finances of the company with this online and going well as we expect, the finances of the company could turn around incredibly quickly in terms of just that, getting rid of that debt.
Well, yeah, exactly. I mean, the cash flow from Greenstone will help us deleverage, and that's something that's becoming, more and more important, I think, as these interest rates stay high. You don't want to be spending all your free cash flow on interest rates. So delevering, it gives you that immediate return of just reducing that interest burn. That's something we will be focusing on the next few years. But I just want to go back to you made a reference to team, and when we acquired Premier Gold and along with that their interest in the Greenstone joint venture, one of the key things we looked at was the team at Greenstone, because Greenstone was operating somewhat autonomously, right? It was a 50-50 joint venture with another mining company, and they had their own executive team and their own sort of offices and processes, etc. And the team there, as part of our due diligence, we were really impressed with what they had done and what they had done to advance that project. They had been working together, right through exploration to development to permitting and then into construction readiness. And by the time we were ready to do or announce make our construction decision, I guess, and make that public, the team down at Greenstone had taken detailed engineering all the way to 85%. They had done substantive drilling and geotech drilling in the area of the plant and the tailings facility in particular, and had put together just a phenomenal team and structure with G Mining. And I think that's just been a huge strategic advantage to us, both the relationship and the way they structured the construction team with G Mining, and just the folks at Greenstone have been there for so long, know the project inside out, know the community, know the area, and I think have just done a great job. Too early for victory laps. I mean, we want to see this project get into commercial production, but us at Equinox, and I think anyone that's been to site, have been very impressed with the team there.
No, I like your attitude about that, Greg. That's excellent, and how you approach this. And you've got a lot of things on your plate as president and CEO, and of course, the whole team has lots of things happening here, all really simultaneous to what is happening at Greenstone as well. So keep up the efforts, as a lot of people are figuring out. Mining is very difficult.
That's an understatement.
Well, let's continue here with an operational update at the mine operations in terms of just highlights you'd like to mention, and then also just a refresh for the audience on expected year-end production guidance, of course, within the parameters that you can give, and then just expansion and optimization activities that you want to mention across the project live operations.
Yeah, I mean, in addition to Greenstone, we've got 7 other mines that are operating today, as you mentioned at the beginning of the call, across Brazil, the United States, and Mexico. And our guidance for 2023 for production was 555,000 to 625,000. I just say, 600,000 ounces of gold at around $1,600 all-in sustaining cost. So that's our guidance for the year. Big chunk of that comes out of our Los Filos mine, Mexico. That's 160 to 180. So that's our largest producer right now. And then next in line would be our Aurizona mine in Brazil, which is 120 to 130,000 ounces this year. In terms of the portfolio itself, there is a lot of organic expansion and growth potential within the portfolio. And just kind of starting in the United States here with our Castle Mountain project, we brought the phase one of that mine into production in 2020, and that's relatively small. 20,000 ounces a year, 30,000 ounces a year. And really, it's almost a placeholder to prepare for the expansion to over 200,000 ounces a year, which is something we're in the process of permitting right now. So that's a big focus for us. I'd love to see that permit come in next year. It's probably a 2025 thing. And as soon as we've got the permit, we'll start that expansion at Castle Mountain. That'll bring us another large scale 200,000 ounces in the United States and North America here. And I think that's going to be a nice cornerstone mine for the company as well, along with Greenstone. In Mexico at Los Filos, we did put out a feasibility study last year where we outlined the construction of a 10,000 ton per day CIL plant that would process the higher grade material from the underground deposits and from the open pit at Los Filos, which could increase production to almost 300,000 ounces a year. A bit of a larger program at Filos, and we'll have to make a decision on that in the next couple of years. We've been running it on a status quo basis here, just given some of the challenges we've had at Los Filos, but that's another area that we're working to advance over the next year here. And then down in Brazil, we've got 4 operating mines: Aurizona, Fazenda, Santa Luz, and RDM. Aurizona has a very substantial underground reserve and resource, and getting underground at Aurizona is a priority for us. We've got permits to build some declines at the site at the Piaba open pit, and we're looking to start that work next year. Get us underground, size it for production, and we can do some drilling and some bulk sampling once we're under there as we continue to advance a feasibility study for what the optimal path will be at Aurizona. Bottom line is, I think that mine will run for decades with that underground deposit, and we're just keen to get started on that. And then Fazenda and Santa Luz, those are a couple of interesting projects. They're very close to one another. We've got the ground between them. They're both in Bahia, and together they're producing 120, 130,000 ounces of gold per year right now. But we see a fair bit of upside potential, in particular at Fazenda. We're starting to look at these two projects or these two mines as a bit of a district or a complex called the Bahia Complex. And between the two of them, there's a lot of prospectivity in both the ground positions and potential to increase production through an open pit at Fazenda and some underground expansion as well. So, collectively, that could be another major or significant production center for us in Brazil, and we see a lot of potential there as well. So it's as you said, we've got a lot on our plate. We've got a number of projects here. All of them have their own challenges, but also a substantial amount of opportunity. And I think with Greenstone coming on and the advancing of Castle Mountain's permitting and some of the things we're working on in Brazil, we'll be able to continue to increase our production profile here over the next few years and keep working toward our vision or our target here of 1 million ounces of production a year.
I'll come back to a couple of things you mentioned here in a moment, but just want to discuss briefly just the in-house exploration work. Obviously this is a piece of the company that probably not a lot of investors have considered, but just that overall work to replace depletion and even grow resources across the portfolio in the coming years. You talked a bit about Arizona, and just talk a little bit. And I know this isn't the first focus of the company, obviously, given Greenstone and some of the expansions, but talk about the exploration of potential at the company's portfolio and what you think would be kind of the immediate focus on exploration once some of the things are cleared off the plate.
We don't publicly talk a whole lot about exploration. I think it's just, the company's status as a producer, and any individual exploration results sort of lack of materiality, I suppose. You just start moving away from some of those press releases. But that's not to say it's not a focus within Equinox. Our chairman Ross is a geologist by trade. Scott Heffernan, who's our EVP of geology or of exploration, he's running the show on the exploration side, and he's got a meaningful budget, and he's got a lot of work that he does every year. And it's some of my favorite. I'm an accountant and a finance guy, and some of the best money you can spend in this industry, or the highest return on investment, is when you've got a mine with a shorter mine life, and you're able to use the drill bit to increase your reserves, increase your mine life, and then directly increase your NAV. And you can spend $5 million at a mine, and then create $50 million plus or more of MPV. That's just a phenomenal return on investment. So we're kind of blessed in that we have large land positions around our operating mines. We've been able to increase mine life, increase reserve and resources at the mines, Arizona in particular. We've been able to do that every year at Mesquite as well. And that translates directly into increased mine life, increased life of mine gold production, and increased NAVs. So we don't talk a lot about it, but it is an area that we do focus on. And again, because we're not doing a whole lot of greenfields exploration, we're very focused on near mine exploration, in particular mines where we're going to get the biggest bang for our buck.
Fully agreed. Just that the ability to be able to replace depletion is, I think, a key component. And of course, we've seen that even with companies like Lundin Gold be able to do that at Fruta del Norte. And of course, you guys are continuing to do that in various different places across your portfolio as well, Greg. And I think that folks should not forget about the potential there and that value add that will certainly come with that. Talk about maybe some of the challenge areas you see for the company as it completes Greenstone, continues operations, and also works on expansion projects, as we've discussed. Of course, permitting at Castle Mountain, maybe additional work at Los Filos, of course, to get that expansion completed. What is on your mind in terms of, maybe the biggest challenges for the company in the coming years?
We like to focus on the things we can control, right? We can't do a lot about the gold price. It's going to do whatever it does. We have a policy most of the time of not hedging. We do have a few hedges in just as we complete the construction at Greenstone, but that's definitely an anomaly for us. We're not a company that really hedges the gold price. And so, the big challenge we've had over the last couple of years really has been inflation. We saw a lot of our input costs increase pretty substantially, directly hits our cash cost, directly hits your margins. And that's an area where this year in particular, we really just said we've got to focus on costs, right? And we have internally, we have an asset optimization program. We've hired a couple of guys from a larger mining company that have a lot of experience in this type of area where they're looking for opportunities, whether it's on procurement or operating efficiencies, to really just start managing that side of the income statement a lot better. And that's really on the cost side. That's something that we are focused on, that we are generally a higher cost producer, and we want to correct that. We want to have a decreasing cost profile, and Greenstone will help, but we want all the assets to contribute to that. We're also levered, right? We took on leverage to build Greenstone and to advance some of our M&A activity. Along with that, you've got an interest rate that's increased pretty substantially over the last couple of years. I'd like to get that leverage down. So longer term, as we bring these assets into production, it's going to be that capital allocation discussion all the time, right? Do we invest in the growth, or do we pay down debt? Are we able to do both? What's the optimal path for our shareholders? So those are sort of the strategic considerations and challenges that I see in the next few years. I mean, we've got a lot of areas that where we can grow. Like I said, Castle Mountain is one that we'd really like to see permitted sooner than later, so we can get started on that. But that's an area, the permitting side of it's an area where we have less control, right? So in the meantime, while that process unfolds, we'll be focusing on trying to advance Castle the way Greenstone was advanced, right? Get as much detailed engineering as we can, get it as construction ready as possible. So once we get those permits and we're ready to go, we're sitting on a real solid foundation to start the construction and expansion of that mine.
Good thoughts on just, how you see this and of course the deleveraging bit of it as well. And did mention M&A. I want to come to that now and just discuss mergers and acquisitions with you. Any thoughts that you can share just broadly on the sector M&A that's happening in the sector, not Equinox, but just general M&A in the sector and the appetite for that. And then just this extended period of suppressed valuations in many cases for a lot of the juniors and mid-tier companies. And then also from Equinox's point of view, with some of these major capital expenditure projects winding down over the next couple of years, what do you see on the M&A front for the company?
I mean, yeah, okay. So as a general comment, I'm actually surprised we haven't seen more M&A recently. You can look at depressed valuations in a lot of cases though. If it's a share for share deal, it's all relative, right? So you can run that math and figure out what makes sense. And as long as you're not sort of using cash to do sort of those larger transactions, then you should be able to look at it from a relative perspective. And valuations have been depressed. So actually, if you're a company that's flush with cash, you're trading at a higher multiple, there are bargains out there to be had. So I'm a little surprised there hasn't been more. But that in the gold space, it ebbs and flows, and I'm sure we'll see more M&A going forward. For the at the junior side, at the very junior side, it's just such a tough market, and whether there has to be sort of commercial, a rational commercial decision to do M&A or a bigger picture plan with good supportive shareholders that can help fund those smaller companies through that process, because it's not cheap, right? And you don't want to undertake M&A without having that kind of support behind you, because you could just as easily destroy value, even if you're able to demonstrate that it's been accretive. For Equinox, we built this company on both M&A and then developing assets as we've acquired them. Along the way, we've also sold some assets and have spun out a few new companies, including Solaris Resources, and we participated in the creation of I-80 Gold, and we created Sandbox Royalties along with Sandstorm. So we've always endeavored to optimize our portfolio and optimize value creation in the portfolio over time. I don't think that has changed at all. I mean, we've been very focused on advancing Greenstone. We've had a fair bit of volatility in our share price over the last couple of years as we've done that. I think that as Greenstone gets to the end here and we're able to bring it into commercial production, hopefully that does reflect in our share price and our valuation, and perhaps some more opportunities will be made available to us. But frankly, there's just not a lot out there that gets us too excited. I think the number one target for us, certainly over the intermediate term, would be working to acquire the rest of Greenstone itself, right? Orion has 40%, and I think we'd love to own 100% of the project. So, that's something that nothing certain, but could come to pass at some point, and I think that would be sort of the primary target for us in the intermediate term. But in the meantime, we got to get that thing up and running first, and that's still our primary focus.
Absolutely. Yeah, lots of things happening here. Completely understand if Orion's willing to give up their piece. It's a good project, and hopefully you guys can take more of that ownership share as well, Greg. So I appreciate your thoughts on that. And then, of course, the thoughts on just the broader M&A and some of the challenges in the sector that we're seeing. Switching gears here over to community efforts, Greg, maybe just tell us a little bit about ongoing efforts on the community front to support and enhance local community, as responsible mining, as you and I both know, is a standout economic generator for anyone who is involved. Any comments on some of the work that the company has been doing on this front?
Sure. I direct people actually to our website, to our ESG section in the website, and we've got a number of reports on that, including our annual ESG report that actually highlights a whole bunch of different endeavors, both generally and then some specific ones in the communities we operate. I mean, I totally agree with you. I think that there's such a tremendous amount of both economic activity, but also, social opportunity that comes when a mine is in an area, right? Whether it's education or access to clean water, or access to medical, or access to employment opportunities or business opportunities. And I think most Canadian mining companies, have always, or at least in my career, have always worked constructively with communities generally, and trying to ensure that benefits from the mine are also shared with the communities in terms of all these opportunities that are available to them. And you can't please everyone, and not everyone agrees with mining, and you'll get other stakeholders involved that might have a different opinion. But I think most Canadian companies are trying to do the right thing. We certainly are. I think where we are starting to improve as an industry is reporting on it. I don't think we necessarily advertised it a whole lot, or had these fulsome reports on our websites that were available to people to see what's happening in some of these communities. I think the industry is getting better at that, and I think that's important because, um, like I said, some people aren't aware of the kinds of uh, of benefits and opportunities that can be realized by a community when mining comes into the area. And that's a big part of any mine. Of those people that live near the mine, often they're your employees, often they're stakeholders in other ways, and certainly just living near a mine has its own unique sort of characteristics. And so you need to work constructively with the communities, and you hope that you have the kind of relationship where they're supportive of the mine, and everyone's benefiting. And that's certainly our goal at Equinox.
Whether you're a developed economy or you're an emerging economy, doesn't matter where you are in that life cycle. I think that absolutely mining is absolutely critically important. Things like energy, and we've been reminded of that in the recent years, that you have to have your own supply chains, and positives about having, self-reliance and independence when it comes to things like critical materials and, of course, energy. And then, of course, just the sheer wealth that mining generates. And the fact that you and I both know that at the end of the day, in order to have a modern life that we live in, mining is so important. And of course, if we're growing things, we need fertilizer, which comes from mining. And so, to me, a very, very important subject and important matter to have responsible mining globally. And just with that, would like your comments after this as well as we wrap up, but just a bit off topic here, but semi related, Greg. As you know, for some investors, ESG scores are being pushed and populated on investment platforms as an additional metric to base their investment decisions on. But to you, aren't things like operational expertise, people, geology, junior market experience, margins, cost control, valuation, and just good business practices also important when determining whether or not to invest in a company?
Personally, I think those are critical when looking to invest in a company. The ESG side of it is important, and it always has been, right? It's just like I said, you need to be, responsible partners with the communities you operate in. And that also means having respect for the environment and ensuring that, the work that we do mitigates as much as possible any negative effects on the environment. Ideally, it leaves things in a more positive state than when we started. So, to me, that's good business practice. It also is just required to have the support of the governments and the people where we're operating. You've got to have a business, right? You've got to have a business that has a plan that either is or has a plan to be profitable, that is delivering returns to shareholders over time, that is a viable business that can sustain itself over the long term, or else it doesn't really matter what your ESG score is. It's not going to make any difference because you're not going to have a business to have a score on anyways. So I think that companies really do need to focus on their core business. And I think that, again, enhancing the reporting around ESG, and if you do have gaps that you need to address them. But you got to make sure that the tail's not wagging the dog here. We've got to have sustainable businesses for the long term for the ESG aspect to make any sense at all.
Well said. No money, no ESG. Fully agree, Greg. I think that's a good way to come at this and look at this and understand what things need to be in place first before you can enjoy some of these benefits. And well said once again. Well, Greg, short of any closeout comments, which you can certainly bring up here, but I'd like to leave it there for now and ask you for potential investors who are listening in. The company does have a market capitalization right now of about 1.5 billion US dollars. Why should Equinox Gold be considered within the institutional, family office, and retail investors' portfolio, given where the company stands today and current market conditions?
If you looked at Equinox around, across our peer group of, intermediate or mid-tier gold producers, we have one of the highest reserve bases. We've got 17 million ounces in reserves. We have probably the highest production growth over the next 2 to 3 to 4 years. We will be one of the higher producing or companies within that peer group as well over the next few years as we bring some of these expansion projects online. But we are trading, lower on a price to NAV basis than most of our peer group. And there's some, I can speculate on reasons for that. One reason is that we do have a lot of our valuation tied up in development or expansion projects, and those tend to trade at a discount to operating mines. But we are moving those projects, and in particular Greenstone and then Castle Mountain, into production. And these mines that have long mine lives, large production profiles, over 200,000 ounces, and in the case of Greenstone, over 400,000 ounces in the United States and Canada, they are rare and they are valuable. And I just think as we, continue to bring these mines into production here, we should start to see a pretty substantial re-rate in our price to NAV. And I feel like I've been saying that for years, and it's because we have been a growth-oriented company, so we've tended to have a lot of our NAV and development on an ongoing basis. We've continued to buy projects. At some point, the operating NAV will exceed the development NAV, and at that point, we should start to see that valuation flip. So we got a lot of fun stuff coming up. I mean, Greenstone really is a game changer for the company. It's where probably most of our news flow will be focused here over the next 6 months. And sometime in the first half of next year, we'll have that first gold pour and hopefully move pretty quickly to commercial production. So, for any investors that have more questions on that, they go to our website. They can reach out to me or to Ryland Bailey, Investor Relations here, and we're happy to provide any more detail that anyone might want.
Greg, I appreciate that and certainly share your view with respect to where we're headed with this company and the outcomes going forward here. And of course, as you know, as we discussed before, mining is very hard and it takes time to get these things all put into place to really realize that bigger upside that we know is coming for the company. Greg, one more time, just for the best way for folks to contact Equinox, is it through the website?
Yeah, go right to our website, and there's a contact tab there that has all of our information.
Well, look, it's always a pleasure to speak with you and get updates on the company progress. Thank you for the time, and we'll be back in touch again soon.
Appreciate it, Andrew. Thanks a lot.